Hi everyone, good afternoon. Today we have Jianggan. We are happy to have Jianggan Li from Momentum Works, someone who has been looking at Southeast Asia internet for a really long time. So maybe we have Jianggan to introduce.
Hi, Shengyong, thanks for having me here. My name is Jianggan. I'm originally from somewhere near Shanghai, but I've been living in Southeast Asia for, 22 years. And I have been in the tech industry for about 10 years, starting with Rocket Internet, where I was managing a ride-hailing business called EasyTaxi across Southeast Asia. Then I was managing Foodpanda for a while. Then afterwards, I moved across different regions, had some stint in the Middle East, and worked in India for a while. Then came back to Southeast Asia and started Momentum Works. So Momentum Works is supposed to be a venture outfit where we really cover, different aspects of the ecosystem. So we cover a number of aspects. We actually have a research team which helps our friends understand the ecosystem. And we also have a small sort of academy unit which helps corporates innovate. But the main thing we do is in the venture space where we build, scale, and we're very fortunate to have exited one venture. So quite a bit of experience across the 6 major markets in Southeast Asia. And I have to say that the market has evolved quite a bit over the last few years.
Oh, thank you for your introduction. It's great to know that we managed to find someone who really understands the ground, who has been in the industry, who understands the culture within Southeast Asia. And let's kick things off. Today, we're talking about 3 things in Southeast Asia within the digital space, within the internet space. We'll start off with e-commerce, and we'll talk about logistics, and we'll talk about Fintech after that. So let's jump right into e-commerce. So today we see like different models within business models within the e-commerce industry, within the ecosystem. The 1P, the 3P, what we call it B2C, C2C. Lazada started out like a 3P B2C, Shopee, C2C. But currently in Southeast Asia, we don't really have a 1P e-commerce business model. And so what do you think are the most appropriate business models within Southeast Asia? And what do you think the future holds for this entire business models, these business models we talked about?
It's kind of interesting when I was managing Rocket Internet companies like EasyTaxi and Foodpanda. Lazada was actually our sister company before it was acquired by Alibaba in 2016. So I think there was quite a bit of debate back then to say that Southeast Asia e-commerce was very small, nascent, or depending on what perspective you hold, non-existent. So how the path will evolve. So I remember back in 2013, 2014, there was quite a bit of debate to say that it will evolve to become like the US, like Europe, or like China. But China e-commerce back then is very different from China e-commerce now in terms of infrastructure and level of development. Over the past 9 years, we have seen things evolve quite drastically. I think Lazada chose the path of going to B2C because I think especially after the acquisition of Alibaba, so they understand that the brands will eventually have larger contribution to e-commerce market revenue. So there was lots of effort going into developing with the brands. I think Shopee took a different approach to basically copy Taobao in its early days. The question is that, which model suits the region at the moment, especially the region's level of economic development, level of consumer education, level of infrastructure, as well as the competitive landscape. I would say that for the past few years, what people cared most was selection and savings. So many of you, if you're from China, you probably know the term 多快好省, selection, speed, quality, and savings. So this was developed, I think, originally by some of the revolutionary leaders, but it's quite applicable to the value proposition of any forms of retail, including e-commerce. So I think for most countries in Southeast Asia, people have cared a lot about selection and savings. As the economy develops, of course, COVID was a big disruptor, and there's been lots of debate about what's the real impact, whether it accelerates, whether it reduces people's spending power, etc., etc. But I think eventually the market will move towards quality and speed. So when would that happen? How would that happen? And when that happens, and whether there will be a good like online retailer like JD, which will emerge in the region, we don't know yet.
Got it. Interesting take. Thank you for the take on the future of what we think Southeast Asia internet and the entire e-commerce space would be. So you talked about like promising markets in Southeast Asia. Which one do we find it to be the most promising? And definitely, would recent macroeconomic headwinds like inflation, high oil prices driving freight costs up, would these factors actually impact or hinder entire e-commerce growth or the entire future for ASEAN e-commerce altogether?
So when I was working for Rocket Internet many years ago, and we had a number of businesses which span across different regions, and we always say that Southeast Asia is the trickiest, because you go to Latin America, 2 languages, and you can send executives from Mexico to Argentina, they can still function. And in the Middle East, most countries speak Arabic. So Southeast Asia, different cultures, different levels of economic development, and different regulations as well. So it really makes things a little bit tricky. If I were to analyze the 6 major markets, I would think that the markets with a higher level of economic development tends to have better penetration and better basket size, as well as better infrastructure in terms of payment and logistics. So these are the countries like Singapore, like Malaysia, like Thailand. And of course, people will say that, okay, these markets are relatively small compared to the ones with larger populations, such as Indonesia, Philippines, and Vietnam. But what we have seen is that, if you draw some examples of companies in other parts of the world, Poland, a country of 38 million people, and you have Allegro, a local company which developed a big presence and beating Amazon, and so far it's still ahead of Shopee in Polish market. So is the market too small? That's up to people to judge, but I do think that these markets together is sizable. Then the interesting question is in Indonesia. Many people look at the GDP per capita of about 4,000, and also the most interesting part is the large population, 270 million. So a lot of investment, a lot of talent went to Indonesia since 2016 to push the infrastructure, push the seller and consumer education along. So does the economics make sense for Indonesia now? I would say it's much better compared to a few years ago. But I think to win in Indonesia, you probably need to operate much more efficiently compared to if you were to win in some of the better, more advanced economies in the region.
So we talked about local champions, we talked about regional plays, you mentioned about countries, 10 different cultures, 10 different languages in Southeast Asia. So this comes into mind, like the regional players in Southeast Asia and the local champions. For example, your Tokopedia and your Bukalapak in Indonesia, Tiki and Sando in Vietnam, and you have your Shopee and your Lazada in the whole regions. So how should we think about this in the long run in terms of competitive dynamics? Is it going to be your regional players who will stand out, or would your local players be able to defend its ground altogether?
Yeah, this is the topic which has been debated over and over, and for the last few years. So if we I think it's there are many dimensions you can analyze for these different players, but essentially, if we were to summarize, the regional players would have a few advantages. They have better access to capital. They also have better access to talent. These are not only the operational talent on the ground, which you need to source locally, but the access to talent who can do marketing, operations, tech, product, and quite often that you need to. The region doesn't have abundance of talent, experienced talent, so quite often you have to source from elsewhere. And of course, working for a regional company is more attractive to talent from other parts of the region than working for a local company. I also think that the regional players have advantages in terms of economics of scale, in product, in infrastructure, etc., etc. That said, I remember I mentioned Allegro in Poland, which managed to beat Amazon, and we also have the case of Alibaba, which initially beat both eBay and Alibaba, which beat both eBay and Amazon in China. People said, "Oh, China is a big market," but 20 years ago, it was a small market, right? I mean, and the local players didn't have as much resources as the international players. And how did they manage to do that? So a number of things. I mean, the leadership had the entire focus on the region. They don't have, they're not executives sent from elsewhere who have always have a way to back off if things do not work out well. And they have the focus in terms of people, in terms of organization, in terms of product. So do we see the same thing happening in Southeast Asia at the moment? I would say that not so much yet, because I do see some of the regional players have a pretty good localization in terms of leadership, in terms of people, in terms of organization. Will it remain this way? I would think that if things continue this way, I think the regional players would have some advantages over local players. But that said, I mean, when the market develops, I mean, who knows?
Got it. So it's something that remains to be seen, but obviously the regional players do have a bit of an advantage at this moment. Yeah. It was great that you brought up about China, because like that's just one question that a lot of investors are actually interested in. Essentially, the e-commerce take rate on merchants in terms of commission rates, your payment fees, your value-added services is really quite high compared to that in Southeast Asia, as compared to China. How should we understand this entire situation?
So we got asked the same question a lot when we released our Southeast Asia food delivery platforms report in January this year, and then people are saying that in most countries in Southeast Asia, the GDP per capita is lower than that of China, and how can the food delivery players charge a higher commission compared to Meituan in China, for example? I would think that the answer partly lies in history, right? So if you look at the different platforms and the different payments solutions, UnionPay, Alipay, WeChat, etc. So historically, the players have been charging very, very low take rate and commission. So and also when you talk to any veteran from Chinese internet, they will tell you that the biggest companies are all advertising companies. They make their revenue from 流量, right? Consumer traffic. I'm having trouble explaining this to lots of people in Southeast Asia. I mean, how this actually works, because people look at take rate. So if you look at Alibaba, I think half of their revenue comes from what they call customer management, and a bulk of this, I would say the majority of this actually came from different kinds of advertising and marketing. So essentially, they didn't need to have that much high take rate to be viable, to be profitable. But when we look at Southeast Asia, I think for most platforms, advertising is still a small business, and also they started with merchants accepting a higher commission for various businesses. I mean, before e-commerce came about. So that's a starting point. But of course, the competition might eventually drive that to an equilibrium. So if you have constant competition amongst the different e-commerce platforms and different players, eventually the effective take rate will probably not be very high. But if you have the consolidation of e-commerce players platforms, you might see a higher take rate, but also you might be able to see them better monetized through advertising. One more caveat: I think a higher commission rate would probably not go down very well politically in some countries where you have a large SME base. So this is something that players need to be played very carefully about.
Got it. So it really links back to, what we spoke about in the previous point in terms of competition, in terms of regional players and local competition altogether. And if competition increases, we might actually see dwindling take rates in the long run. But if it's healthy competition, less price wars, then it might actually maintain what it is. So we really do need to take a look at what happens in the next 3, 5, or 8 years altogether. Yeah. So moving on to this point about path to profitability, this our listed e-commerce operators in Southeast Asia have all talked about a path to profitability. Obviously, with markets having changed in the recent months, and we noticed that competition along the way has actually slowed. Suddenly everyone is lowering incentives, everyone is increasing take rates. So in terms of the entire looks of things, what's your view on the path to profitability? Will regional players achieve that, or will local players achieve that as well? In terms of your local champions, given that they might have a slightly lower market share in their local markets altogether. Yeah.
I think it also goes back to our initial point about 1P or 3P, right? And so if you are a retailer, of course, your margin is higher, and but your scale might be limited because you're having all the assets, all the inventory yourself. But if you're a marketplace, and if you have more consumers on a platform, you will have more sellers, and use that to drive the flywheel. So when we talk about the path to profitability, I do think that all the players have done excessive calculations about at which point they can reach profitability. So the question is not, I don't think the question is theoretically whether you can reach that. I think it's possible, and once you have a significant sort of efficiency in fulfillment, you have enough buyers buying sufficiently frequently from the sellers, and you can achieve that. So the question is, how do you deal with all the friction in the market, right? So operations wise, fulfillment wise, payment wise. So lots of Chinese players came to Southeast Asia, then they start to realize, big picture wise, in terms of a number of mobile subscribers, in terms of number of roads, in terms of number of fulfillment centers, they say, okay, this makes sense. But actually, when it comes to execution, they realize that many things are not as efficient as in China. So, the same length of roads, you might take an extra few hours to reach from this point to another point. So, and also, especially when you get out of the capital cities, there are lots of local nuances you have to deal with, which adds on to the friction. So with all this friction, your path to profitability will be impacted because the market is not as efficient as you hope it would be. The question is, how do you deal with it, right? How do you increase the density? How do you increase the efficiency? And how do you sort out all the operational problems, the people management problems, the local fraud or whatever, and safety issues. So I would even argue that for companies to reach profitability, they need to operate probably more efficiently compared to companies in China because of lack of infrastructure and friction. It's not saying that they can't do it, but it will require lots of effort from the leadership, from the people, and from an organization.
Got it. That's an interesting take. They have to operate more efficiently than operators in China. We do agree that it's definitely a lot more efficient in China given the impeccable infrastructure. So this actually comes on to our next point here. It's a bit of a off throw. It's more like social commerce, live commerce, TikTok. It's another question that almost every other investor is interested in. What do we think, the path to penetration, to adoption for live commerce and social commerce in Southeast Asia? Where do you think it's the TAM, the total addressable market in terms of this social commerce is? And, has it impacted and will it impact e-commerce in Southeast Asia like it has in China?
Yeah, I think ever since TikTok started closing the e-commerce loop in Indonesia, and there has been lots of attention to look at, I mean, whether they can get meaningful market share, because one thing we do know is that I mean, the active users of TikTok is increasing, and of course the methodology of pushing goods in people's time, which they are spending with TikTok anyway, has worked in China, and with the infrastructure that's able to handle payment and fulfill orders, it has taken off. So the question is that, I mean, how does Indonesia, or I think TikTok has launched in other markets as well in Southeast Asia, differ from China? I would say that a key difference we see is in terms of availability of products, selection, assortment, etc. So if you look at many of the things that's been sold on TikTok, that's really thanks to the manufacturing powers of China, which in Southeast Asia it often has to come from cross-border. Over the last year and a half, I mean, I've been working with some of the founders who are in different parts of the ecosystem for live streaming, live commerce, and the sense is that quite often they have to rely on staple goods, like, you know, in the case of Indonesia, it would be instant noodles, etc., as well as the cross-border produced from China. But all of these goods are also available on Shopee and other platforms. And Shopee gives you buy now pay later and better fulfillment. So which I think TikTok is trying to bridge the gap very, very quickly. They have signed up with a number of logistic companies, and but at the end of the day, so we look at what TikTok is doing. It's a number of flash sales of goods that people already know. Will they break through that and to become something more interesting and something more attractive, as they are in China? So this remains to be seen. But I do see that Shopee is taking TikTok very seriously. You can see from the Shopee app in Indonesia, they have been trying with different kind of video capabilities. I would say that it would be interesting battle to watch. So at the moment, it doesn't, I mean, TikTok has achieved some GMV, and whether it's sustainable and whether they can become meaningful, I think it remains to be seen. That said, there's another player which people often overlook, which is Facebook.
Yes.
Facebook doesn't close the loop, right? I mean, it's sort of it allows people to stream, but it doesn't handle payment. It doesn't handle logistics. So it's interesting that in Southeast Asia, you start to have a class of enablers, right? You have the likes of Upmesh, you have Shopline, which I think has been acquired by a Chinese company. So these guys are filling the gap. But one thing we see interesting is that first, Facebook is more popular in some of the more mature and high spending power countries. And second, the social graph that Facebook is able to get attention from users on live streaming has been amazing. They just don't close the loop, so that leaves room for enablers. And I think it pretty much depends on what enablers can do to facilitate the ecosystem.
Got it. So it is really what the enablers could actually drive in terms of how it will help social or live commerce in Southeast Asia. And so it actually brings us on to the second part of the entire conversation, which is also the third part as well, which is logistics and fintech, right? So let's jump right into logistics to start. Like, to switch gears, let's go into logistics. Logistics in Southeast Asia, you know, it's like we mentioned, you know, it has enabled e-commerce to actually do better delivery. The landscape is really fragmented, you know, on scale, on price. We have Ninja Van, like and JT, G2. And then you have your old guys, you have like, you know, DHL, you have like Shunfeng. So it's a little different. And then these are your 3PL guys. And then you have your 1PL. You know, e-commerce guys are doing their own 1PL, like you know, Lazada and also like even Shopee recently in different markets. So how should we think about the differences in 1PL and 3PL in Southeast Asia, be it like, you know, cost management, fulfillment centers, And what do we think are the trends and developments within this entire logistics industry in Southeast Asia?
I think for that question, let me go back a little bit in history. I do remember in the early days of Lazada, and I think in the markets of Thailand specifically, where they had a bulk of their regional team. In 2013, it was just difficult to find logistic partners who can help them fulfill the orders. So that was the main reason why Lazada or some earlier players went into building their own logistics. But of course, things have evolved quite a bit since then. As you mentioned, the likes of Ninja Van, the likes of Jianggan Express, or also coming out of Thailand, you have Flash Express. I mean, and these players have become sizable by working with e-commerce platforms. I mean, some of them work more closely with Lazada, some of them work more closely with Shopee, but they have become sizable. They have made investments in infrastructure, dispatch, etc., etc. So the question is, now when companies like Shopee are starting to build their own logistics and channeling some volume to their own logistics, what will happen next, right? So so I would think that none of the e-commerce players would want to own the whole logistics, because that means redundancy, right? That means that you would have capacity that caters to a peak demand, but you don't have shopping festivals every day. So I would think that they would keep their logistics concentrated in big cities, in areas with a high density of demand and spending power. And at the same time, they will work with different partners for areas where they can or that are not willing to operate more efficiently. So which means that there will be some dynamics going on. So it also depends on how much the e-commerce players themselves want to take the risk or want to take the assets, right? But what I would foresee ideally is that they want to keep all the high density areas and they want to guarantee the fulfillment. I think so far, and the customer service level, sorry. I think so far they have not been doing a very competitive job compared to the third-party players, compared to the top third-party players yet. So what happened next would depend on the level of investment and the level of sort of systems and processes and that they're able to build in, and also the attention from the management. So as for the 3P players, so would they eventually become price takers, or would they have some negotiation power? I think that also depends on how concentrated the demand originators are. I mean, the platforms, etc., etc. So and also, I mean, how the, if it's concentrated, and what would the demand originators do with their in-house logistics? But so far, what I see is that every logistic player is happy that TikTok is joining the race.
Oh, yeah. I mean, it drives the sheer volume, the number of orders, and once you have scale, it will definitely help feed the entire growth within the logistics industry within Southeast Asia.
Yes, and also it brings the concentration away from just Shopee, Lazada, and a few others, right?
Yeah, definitely. So yeah, this is actually goes on into my next question. Research. So like we are looking at it and thinking about it. Logistics, the enabler of e-commerce, but e-commerce actually is also the driver for logistics altogether. So is that how we should think about it in Southeast Asia? Like we've seen like JT Express expand rapidly, aggressively across Indonesia. Is there one market where we should be looking at the fastest development within in terms of logistics in Southeast Asia? And like will the rest of the names like Ninja Van, Flash Express, how should we think about them? Are they any different in any different countries? Like, let's bear in mind Southeast Asia is 10 countries, and so like your thoughts on this?
I think theoretically, eventually they will evolve to be something very similar. I mean, if you look at the logistic landscape in China, all the large e-commerce 3PLs, I think aside from SF Express, the others are actually quite similar in a way, right? I mean, they serve the same bunch of customers, and I think with the exception of JNT, everybody had some kind of stake by Alibaba. So Whichever, like, I mean, they have the same agent network, etc., etc. So I would think that in Southeast Asia, you start to see that some agents working with different logistic providers. So things start to evolve to be a little bit more similar. The question I think also comes down to how these companies manage their large operations, because essentially logistics is heavy, right? You have people, you have assets, you have operational efficiencies you want to build. So while we can say that in theory everybody should reach the same level of efficiency, but in reality it depends on how the systems are built and how the processes are enforced. So you do see that even in Indonesia, I mean, some players are able to achieve more volume, better service levels compared to the rest, and theoretically it should be easy for the rest to catch up, but really I think it's a leadership organizational.
Got it. Yeah. So let's talk about something slightly different. We're talking about collection points. We're talking about like technology-driven lockers. We've seen that. I've actually used that in China. It's really popular. A lot of my friends are actually using it. You have one technology. You have just a locker where everyone just delivers. Your delivery guy delivers it to the lockers, and the different collection points for easy parcel collections. How can we apply this to Southeast Asia? Because, like, again, it might be different. So what are your thoughts on this?
I mean, for that, we actually look at a few points, and of course, my mom and many parts of my family still live in China, so they have shared with me over the years their experience of seeing how Cainiao Yizhan or Fengchao have grown, right? I mean, has become more and more convenient, and recently with Shopee going to Poland, so we happen to have a member of the team who is actually now based in Krakow, Poland. So nice. she has shared with us extensively about, and I mean, from a customer point of view, how do you see the logistics work? And of course, lockers have been very common in Poland because the cost of delivering to households. When it comes to Southeast Asia, we did see a few earlier attempts to develop lockers and collection agents, but the problem with earlier attempts is that you just didn't have enough density and volume to actually make the business model sustainable. So now, as the volume increases, you see the major logistic players are starting to deploy lockers, starting to develop agent networks again. I do think that, of course, this is more efficient compared to, I mean, you have to deliver to each household door by door, right? So I think it makes sense. The question is, how do you make it make sense operationally in each city? If you look at cities in China, they are highly similar to each other, right? You have 旧城改造, right? Over the last 20 years, so people live in most people live in high density residential estates with maybe 1, 2, or maximum 3 entry points. So it's relatively easy to place these lockers or collection points strategically. In Southeast Asia, each country is different, right? I mean, Singapore has a system similar to China where people live in high dense residential blocks, which you know as HDB. And but HDB is more open, so it's not that people go through the same entry and exit points to leave their estate. So which means from operations point of view, where do you place these agents? Where do we place these lockers? Would need to be calculated differently. And then you look at Indonesia, where most people in Jakarta still live in houses, so they sort of and travel by motorbikes. So I think there's a difference in operations. There's difference in how to make this business model make sense operationally. But overall, I mean, I think it makes more sense to basically have the bulk of orders delivered to one place than to individual households.
Got it. So that would actually involve a little bit more last mile delivery altogether. And so I guess, so from what we've learned from you today would be like, we do have to adapt to your operating environment. It's not one size fits all. Like we mentioned at the start, Southeast Asia is different. We need to change. We need to be able to adapt and adopt and adapt altogether. And so let's talk about something different in terms of 1PL. So we have Shopee Express, we have Fulfillment by Shopee, and then we have, Lazada, and there's something so special like Tokopedia plus Gojek. where Gojek's drivers and two-wheelers are helping with delivery altogether. And think about this with the 3PLs in the region. How does this actually play out eventually? Like, will the 3PLs be will eventually become a competitor of 1PL, and a 1PL becoming a competitor of 3PL? So how what do you think this is going to change? I know talk about
So of course, when J&T and Shopee both took off in Indonesia and across Southeast Asia, so there was lots of speculation about, I mean, what exactly are they, right? Are they sisters, cousins, friends? But I mean, I think you don't need to overanalyze. I mean, it's just Shopee needed people to deliver reliably, and J&T needed somebody to give the volume so that it can invest in the infrastructure and to make sense. So it was a relationship that one needs another to grow. I think once you get to a stage where it is more mature, and this exists in all the traditional industries. You have value chain, you have different players at different parts of the value chain, and some players would have to become a little bit more vertically integrated. Some people will have a combination of their own operations as well as outsourced operations. So I think this is all normal. So at the end of the day, again, goes back to the question of the concentration at each part of the value chain, right? I mean, of course, it's more concentrated, and the players will have a higher negotiation power upstream and downstream. But I would not see that the in-house logistics would want to cover the whole of Southeast Asia, because that's a tremendous task and tremendous amount of management and tremendous amount of assets. So they will work with each other to a certain extent, and the dynamics will be interesting to watch.
Got it. So it sounds like it's going to sounds like Southeast Asia could be a hybrid of e-commerce platforms having 1PL and 3PL. So it's going to be a hybrid. If it's going to be a hybrid, it would mean that some of our e-commerce platforms will have to start investing, or if they have already invested in 1PL capability, your first, mid, last mile delivery, your fulfillment centers. And so what are your observations on this progress? Should e-commerce players invest better? And is there one country within Southeast Asia that is a lot more developed or ahead of stuff in terms of 1PL infrastructure altogether for these platform companies? Yeah,
I think the platform companies are doing that in many countries. But if we look at the I don't have access to numbers, obviously, and but if you look at you look at a few to see, I mean, go to Google Map to see how many own sort of fulfillment centers, collection points that have been built, and you will see lots of interesting activities going on in Indonesia and Thailand. So I think that corresponds to the facts we mentioned earlier, right? Indonesia being the largest country, which naturally, I mean, if you want to be future proof, it has the most number of consumers. And Thailand, in a sizable country with the developed infrastructure and good spending power. So you see lots of activities in these two countries.
Got it. And your thoughts on, in terms of these platform companies investing in 1PL capability, and how far along are they? Yeah.
We did some estimate based on what we see on the ground, based on what we spoke with some of the fleet owners, and I think in certain areas you'll probably see about 20 to 30% of Shopee's volume in certain dense areas already been delivered by Shopee Express. So the question is that have they done a sufficiently efficient job, and in the current market landscape, so would they continue to make investments to improve that? My sense is yes, because that helps them improve the profitability. But of course that depends on how their management thinks. But I do think that that the major players are on the right path to make this investment.
Got it. That was a really fruitful conversation we had on logistics. Let's move on to the last leg of it all, fintech, Southeast Asia. I guess it's the most nascent of all three segments, three industries that we're going to talk about. Yeah, like we talked about it, let's call it DFS, Fintech, DFS segment in Southeast Asia, substantial growth opportunities. I think it was the largest winner in 2021 in terms of PEVC investments.
Yep.
And so in terms of like, where do you see the trends are for in the next, few years for in terms of digital payment, lending, remittance, and what are the factors that can, positively or negatively impact DFS, digital financial services in Southeast Asia?
Okay. So if you look at many of the business models in Southeast Asia, there's almost always a DFS element in that, right? Whether it's offering their own financial services or becoming a lead generator or a sort of demand generation for existing financial institutions. And of course, the stories we often hear is that, people do not have access to adequate financial services. And certain percentage, Indonesia, I think it's about 50% of the people are not banked, credit card penetration is low, etc., etc. So all this present opportunities, and of course, financial services can be added to any transactions, right? Any transaction platforms, be it cars, be it electronics, be it services, right? You can always have a financial element in that to facilitate transactions and to help the stakeholders better manage their cash flow, their inventory. So eventually will increase the turnover, across the whole sector. The question is that how do you penetrate into these areas? Because for many of the sectors which you say that is lack of access to financial services, what we really mean is lack of access to formalized financial service in terms of banks, in terms of structured lending, in terms of etc. But people have been getting by. There are informal ways of financing, there are informal ways of pulling resources together to hedge against risk, which is like mutual insurance down in the community level, etc. So the question is that when tech players come in, how do they change the game? How do they make the game more efficient? And how do they become capable of making a profit from this without taking too much risk? So over the last few years, when we look at digital financial services, we see really, really different attempts going, right? We have lending, we have companies doing just credit scoring. We have a bunch of insurtech players. We have also all the large platforms get into financial services because for two reasons. First, it can help driving the transactions across the platform, and second, there's profit to be made if you do it well. So I would think that the large platforms would still have an advantage for the whole purpose of for the whole reason of they have access to customers, they have access to the merchants, to the riders, to the fleets. So there are people on the ecosystem which need financial services one way or another, and which would depend on the platforms. So the likes of Shopee, the likes of Grab, and I do think they have a positive future in digital financial services. The question is that how do they operate this efficiently and without taking too much risk? So that I think that is one area which I think they can really learn a lot from China, where things have evolved in different cycles, and there are lots of experiences which have been learned and can be shared.
Got it. You mentioned about Shopee. You talked Shopee. You mentioned about Grab. You talked about like the use of their app and how you can actually have the mind share of users and lock it in there. And do you think that eventually in Southeast Asia there would be one app or one digital payment platform that will actually be bigger than the rest, or could it be as fragmented as what it is today?
Okay.
Yeah.
So actually did some interesting analysis that at some point in time there were, I think, more than 800 digital wallets being developed or promoted in Southeast Asia. So that shows fragmented the market was. And of course, everybody was asking this question that will Southeast Asia evolve into something like China, where for digital payment, you have two dominant players. I'm actually a bit skeptical about whether this will be the path, because what evolved in China is something which is highly unique. So in addition to payment, I think Alibaba and Tencent over the last 10 years developed a whole ecosystem of use cases which people can transact on. They have also aggressively go to the offline merchants, and these offline merchants are not owned or controlled by a rival of Alibaba or Tencent. So in Southeast Asia, what you typically see is that in many countries you have conglomerates. They have multiple business lines: retail, cinemas, education, commercial real estate, etc., etc. So many of them have their own sort of payment needs and have developed their own payment systems and their own digital wallets. So it's in most countries, I would say that it's a bit difficult to see things evolve exactly the way that China did. Maybe there was less competition in the Philippines, but in other countries, you see a lot of players who have struggled to become the everyday sort of payment app, because simply there are systems or there are use cases owned by the rivals of their controlling shareholders, which make things a little bit different. But one thing I see which could change the landscape, but also make things even more different compared to China, is the emergence of the government-sponsored clearance systems, right? I mean, in Singapore now you have Pay Now, which I think the user face still can be improved, but the functionality works. In Malaysia you have Do It Now, and in Thailand you have Prompt Pay, and I think similar system is being proposed called Snap in Indonesia, and which will probably take a few years to develop. And these governments are talking to each other to make cross-border settlement possible. So the question is that will Southeast Asia evolve into something like India, where you have the UPI, where you have really different players operating different payment platforms, but they are interoperable. So if that happens, I think the market landscape will be drastically different from that China.
Got it. So it's interesting how you brought up how government, supported digital payment platforms could be actually a differentiator in terms of the entire scheme of things, right? Like, so sounds like one of the things that we should all be looking at will be how cross-border payment settlements for these different government-supported apps could be a different idea altogether. And so how do we think about that in terms of these e-wallet platforms against cash? Do you think is it going to be quick, or is it something that it will take a slightly longer period of time? Because like most of the companies that we talk to, most of the e-wallet platforms we talk to, and they say that their largest competitor is actually cash. So what are your thoughts on this?
I do think that of course it's politically correct for them to not name a competitor as their competitor. So cash is easy one to blame, because cash will not make a statement to defend itself, right? But yeah, so we do think, I mean, after years of sort of driving adoption of e-wallet and digital money, and cash still dominates in many markets, and interestingly, you see the percentage of cash on delivery for e-commerce in Indonesia has actually increased over the last 2 to 3 years. Not because cash is taking over digital wallet, but it's because e-commerce players are reaching to the segments of the society which have not yet embraced digital payment. But of course, these e-commerce players want to serve this community, so they made cash possible. The question is, of course, from government point of view, it's beneficial to build cashless societies. I mean, it helps them plan, it helps them track tax, it helps them avoid financial crisis. If you have the full data about, I mean, how things are going in the economy, so you don't rely on statistics which were done like a few weeks late, right? So the question is that, I mean, how to make it happen? And who bears this cost? So if you look at the initiatives of Indonesia trying to drive bank account adoption, it went actually quite aggressively. I think all the way until 2018, where the number of the penetration of bank accounts increased from about even to 12% to almost 50%. But once you try to go beyond that, it has become more difficult. So you have people who really don't see a need to use non-cash, and also have people who were previously using a bank account because of government drive, because of some incentives, and they receive their pay into their bank account. You know what's the first thing they do after they receive their pay? They go to the ATM and withdraw all the cash and keep it to themselves. I mean, we have gone to a few second and third tier cities in Indonesia, and we've seen this actually happening on the ground. So the question is that, I mean, how do you create enough incentives for people to use digital payment, and who bears the cost of these incentives? Of course, now there's this hugely controversial company coming out of Vietnam called Sky Mavis. They developed a play and earn game called Axie Infinity, which went very popular in the Philippines. And I think about 1.5 million or 2 million people actually use that on a daily basis, and many of them actually are making real life transactions using the coins they've earned there. So, and of course, this is controversial because whatever they earn there is not legal tender and is not supposed to be used for real world transactions. But it probably offers some food for thought about, I mean, how do you design and design development programs and incentivize the users to convert to cashless? I mean, simply give them sort of one-time incentives will probably not last. You need something which is more sustainable.
Got it. Let's switch gears a little. Buy now, pay later products in Southeast Asia. We've seen that with Shopee, we've seen that with Grab, we've seen that Shopee in Indonesia, Grab in Singapore, Malaysia. There's even now Live Now, Pay Later. And then what are your thoughts of these Live Now, Pay Later, Buy Now, Pay Later, and the prospects of it in Southeast Asia? I mean, to me, it sounds like this is just another form of credit cards, right? And these providers have really high commission rates charged at this moment, close to be 8%. Do you think this is sustainable? And what are the risks behind it? Yeah, your thoughts on this?
We happen to have an intern in our company at the moment who worked for Klarna for a number of years, and we have been debating with him internally about buy now, pay later, and also what's really interesting is the difference between Southeast Asia, where we are, and the market Klarna operates, which is Western and Northern Europe. So if you look at buy now, pay later, essentially they serve two purposes. One is credit, giving credit to the consumer, and second is channel the consumer traffic to merchants, right? I mean, merchants can use that to offer incentives to increase the conversion. So which if you think about that from a functional point of view, is not that different from credit card. The difference is that the access to buy now, pay later is much easier compared to credit card. And I think people from China would know the whole journey of Alipay, Ant Group's Huabei, the buy now, pay later product, and they issue credit to people who have difficulties or no credit history to get a credit card approved by the banks. I mean, often like fresh graduates, young people. And also they help people who already have credit cards to access some goods where it's just not feasible for credit card companies to offer installment. Right. So the question is, when we come to different countries in Southeast Asia, would that business model sustain on its own? And of course, there's always the issue of timing, right? So when the capital market is positive, you have the ability to try different business models and find out what works. And if the sentiment is bad, you're sort of forced to find a pathway to profitability quicker. So it's double-edged sword. But what I would say is I think offering a kind of credit, it's good. And but of course, this area needs to be regulated. Maybe not as much as credit card, but there needs to be certain boundaries so that it doesn't it doesn't get out of control. As for the merchant fee, whether that's sustainable. So if you look at what Klarna does, they essentially work a lot with high margin merchants, where a significant percentage of their margin would go into marketing. So the 8% would be partially justified as marketing cost. For daily necessities, this will hardly work, right? I mean, yes, the margin will not be that high to justify this marketing cost. So the question is, if you take this away, is there enough market in Southeast Asia for buy now pay later players, for standalone buy now pay later players? So this is the question that I think the players need to figure out. But I think at the moment, there are many buy now pay later players, probably too many for the market can digest. But that's the same as any new sector, right? When it's emerging, you have different players. Eventually, one or two of them will figure out how to do the game well.
Got it. Yeah, I think that was pretty fruitful on fintech. Let me throw you a curveball. Let me ask you something slightly differently. Development of Web3 and how will it impact the digital financial sector, the scene, and the landscape in Southeast Asia? Yeah, your thoughts on Web3?
We actually have a part of the team actually doing full-time research on Web3, because this is the area that we see a lot of potential, and especially when NFT was invented or was popularized over the last year and a half. So you really see that a few possibilities of NFT. I mean, it allows people to sort of authenticate ownership of digital assets, and maybe eventually some physical assets as well. So the question is, we know the big direction. We know that, okay, something might emerge out of it, but we don't know which one. So now you see a lot of different entrepreneurs experimenting, and different sort of investors, I mean, giving out small checks to these entrepreneurs. So we are really in an interesting phase where you try to see which use cases will eventually emerge to be feasible. But one thing I mean, we have discussed a lot internally is that so whatever happened with the crypto world is really the bubble before the real use cases of NFT, of Web3 emerge. So now we are at interesting junction. I would encourage everybody to sort of understand the potential NFT applications, learn the economics of a few players which have made waves, like Axie Infinity, Stepan, etc. Doesn't mean that these companies were lost, but they have done some innovation which is interesting, and we do think that entrepreneurs will build on top of that to have something more interesting. It's very hard to predict the precise direction, because if we could, we'll go all in, right? Betting that. But we know generally, I think things will happen, and it's good to keep your eyes on it and study that.
Got it. I mean, Google wasn't the most popular one back in 1999. I mean, it is now. Yeah, so I thought that was really interesting in terms of Web3. You mentioned about NFT. Yeah. Do you think the way NFT could impact the way that we shop online? We do shopping online, and the impacts of the growing NFT markets that, any impacts on that?
I think just to give a example, so there have been lots of attempts in online groceries in Southeast Asia. So really, I mean, not only Southeast Asia, but across the world, right? I mean, last year you see a wave of 15 minutes delivery, and you see community group buy, which went popular in China and was popular once in Southeast Asia, but nobody could prove the business model work. The problem with such business models is that you do have a platform which aggregates everything and takes all the risks and all the sort of hidden costs with the platform. So it's very difficult to make it all make positive economics. We have been discussing with lots of entrepreneurs who have been in this area, and some of the interesting thought experiments is that how about if we design that in a decentralized way, instead of trying to replace the small merchants, the truck drivers, etc. We bring them onto ecosystem that they can participate in the benefits and share part of the investment and part of the cost. And NFT could be used as entry ticket for them, and for them to participate in ecosystem. And of course, the question asked is that I mean, we're dealing with people who are very, very much on the ground, right? I mean, the grocery sellers, people in the wet market, and truck drivers. Are they sophisticated enough to understand NFT and to understand this kind of ownership? But on the other hand, I mean, who are the active players of Axie Infinity? These are villagers in the Philippines. So we should not be too pessimistic about their ability to adopt new technology if there's a benefit to them. But of course, this remains thought experiments. It has not been implemented, but we do see the potential of that happening.
Really interesting idea. Yeah, I think we need to explore more about that the next time. You know, I heard you have a book that you're about to publish, I think in a couple of months' time, or 2 or 3 months' time. Do you want to tell us more about your book?
Okay, so for the last few years, I've been guest lecturing at INSEAD in a course called China Strategy, because lots of people try to understand, I mean, how to get into China. But of course, the narrative shifted a little bit since I think 2018, because people, I mean, the global narratives changed from going to China to how do we deal with all these Chinese tech companies which are everywhere. I mean, TikTok is everywhere. Alibaba tried to be everywhere, and now there's a debate of whether Shopee is a Chinese company or pseudo Chinese company. So there was lots of interest, and then once we were hit with the lockdown, I was discussing with Professor Guo Li Chen of INSEAD. I said, hey, let's put some of the thoughts and some of the case studies that we have used over the years into a book, and to help people systematically understand, I mean, these Chinese tech players and their global journey, and what we can learn from them, and which are the lessons that they have learned themselves in this often tough journey. So we spent a few months, I mean, really talking to all the people we know who used to work with these companies, and some who are still working with these companies, and we put everything together. So you remember I talked quite a bit about leadership, people, organization, and the last thing is product. So these are the common things that we have found through all these interviews. So quite often the success or failure of tech business models does not really depend on a product. It's what you see on the surface, but essentially, I mean, how do you steer the organization, and how to choose and work with the right people, and what mental space you have as a leader, and how do you make decisions will be important. So we started working on a book, and it's good a practice to find a publisher who said, okay, now is the deadline, you need to complete this book. So we got a contract with Wiley very quickly. So it has lots of case studies and lots of historical reference. It's coming out in September, finally, after almost a year and a half of work, and we hope that the book will be useful for the audience who are either from China, looking at how they can adapt themselves into the global markets, but also for people in the markets to see that what they can learn from these companies, which might become I don't know, their employers, their competitors, or the companies that have to regulate. So yeah, the book now is out for pre-order at Amazon. So if you have, feel free to make order. And if you have any disagreements, questions that after you have read the book, feel free to reach out to me.
All right. Seeing the unseen. I guess that's something that we will all be reading in September.